Hello and good day, everyone. Welcome to our second webinar of the year. My name is Fernando, and I'm pleased to be joined by my colleague Matthew Donovan. Today, Matthew will be presenting on the Jackup market in Saudi Arabia and beyond. I've been closely monitoring the Middle East market. It's been highly dynamic from Aramco's large-scale Jackup rig contracted in 22 to the recent suspensions in 24. If you have any further questions about the region, feel free to reach out to either Matthew or myself. As always, we encourage you to submit any questions you may have throughout the session using the Q&A chat box. We will be addressing those during the Q&A segment at the end of the presentation. Please note that the recording of today's session will be shared with all the attendees tomorrow. Also, just a quick technical note, if you experience any connectivity issues, you can take control of the slides and navigate them at your own pace using the arrow buttons at the bottom left of the presentation window. We hope you find today's presentation both informative and valuable. And with that, Matthew, the floor is yours.
Thank you very much, Fernando. I appreciate it. And thank you to all of us for joining us here today. My name is Matthew Donovan. I'm head of rig market research at Esgian Rig Analytics. And our presentation today is the Jackup market in Saudi Arabia and beyond. Our disclaimer first. In our overview today, we're going to be taking a look at an overview of the Jackup market in the Middle East, particularly over the last year, as we monitor the effect of Jackup suspensions in the market. We'll then be taking an outlook, latest developments in the Jackup market, particularly those in Saudi Arabia, and the possibility of further changes, including investigating whether many of the rigs that were suspended will return to work in Saudi Arabia. And we'll also look at some Jackup developments in other regions as we look at the effects of the Saudi Aramco suspensions on rigs working in other areas and potential Jackup work for suspended units in these other regions. Beginning with our overview. Taking a look now at global Jackup demand. Global Jackup demand trended upwards from 2021 to 2024, and that was primarily due to activity in the Middle East. We saw a large number of units contracted, both by Saudi Aramco and other national oil companies in the Middle East, and that brought up utilization and demand globally from 2021 into late 2023. However, as we move forward, Middle East demand has trended downwards since early 2024. This is important for the global market as Saudi Aramco is the single largest operator in terms of Jackup demand, and activities in this area do have global and regional effects. As you can see from the chart there, the number of rigs that are drilling and the rigs contracted for future work shifted downwards from January 2024, continuing into March 2025. And that's for the Middle East as a whole, but the majority of that shift came from Saudi Arabia, from the rig suspensions, which began early last year. And looking at the Saudi Aramco suspensions now. Suspensions began in 2024 and continued over the rest of the year. As an overview of where we've been, really over the past 12 months, Saudi Aramco began suspending Jackup contracts in the first quarter of 2024 in response to a directive from the Ministry of Energy in late January to maintain its maximum sustainable capacity at 12 million barrels per day rather than continue with a planned increase. And that has affected the demand in the region, as many of the rigs that were brought to the region and signed 2 long-term contracts with Aramco were in response to that planned increase in the maximum capacity. So with that being reversed, Aramco no longer needed such an increased Jackup fleet to boost maximum sustainable capacity. And throughout 2024, we saw around 31 Jackups receive notices of suspension. And suspensions were scheduled for up to 12 months, with the proviso that drilling contractors could market the rigs elsewhere during those suspensions. We saw those suspensions come in different rounds. 22 units suspended in the first round, 4 in the second, and 5 in the third round. It's important to note because remember, not all of these rigs were suspended at the same time. And we have now reached the 12-month point for the first round of suspensions. So we're getting to the part where by the letter of the contract suspensions, we should expect to see some rigs either return to work or be notified of further suspensions. Now in 2025, no new suspensions have been announced in 2025 to date. And there was different. We saw these suspensions affected multiple drilling contractors. Most of the major ones that were working with Aramco had some number of units suspended during this time period. And we've seen some of those drilling contractors wait out the suspensions by keeping their rigs warm stacked in the region, or perhaps taking the time to do some maintenance on the rigs. Others instead chose to terminate the contract and then either relocate the rigs to other regions for work or cold stack them if no work was indeed available. We've seen 13 jackups out of those suspended. 31 have secured new contracts of some kind. And this includes a mix of units that have terminated their suspended contracts and so will likely not be returning to Saudi Arabia, and others that could still potentially return to work with Aramco. And that was generally when they received sort of shorter term contracts that would fit in between the suspension period and the resumption of work. So we can see there we've got 13 jackups that have some kind of new contract, 8 that were idle largely in the Middle East during suspension, 5 where contracts were terminated or likely terminated and the rig has been relocated to another area, 3 cold stacked. We saw 1 unit that was bareboat chartered and has been returned to its owner with the contract terminated, and we saw 1 unit that was indeed retired from the active drilling fleet after the suspension. And looking at demand in Saudi Arabia specifically, we saw that fall and over the past year and continue to decline into early 2025. The number of jackups working offshore Saudi Arabia went from 75 units in January 2024 to 60 units in March 2025. But despite this decline, Aramco remains the single largest operator of jackups worldwide. And the contracted rigs that you'll see in the charts to the right, that includes jackups that had their contract suspended but not terminated. So they still do have work that they could potentially return to with Aramco, which is why that number does not change as much over those months. Moving forward now to our outlook, we're going to look at some of the recent developments in the market in Saudi Arabia. So some of the latest developments in the Saudi Arabian market. Important to mention that the situation is still fluid for some of these jackups. We've now reached, as I mentioned, the 12-month mark for the first round of suspensions. What we've seen is that Aramco has not issued blanket extensions or blanket returns to work for the suspended rigs so far. It's becoming different for each drilling contractor. Now, some contractors have received notices with the jackups that suspensions have been extended by a further 12 months. And again, that's up to 12 months in there. So it could be for a whole entire other year, or they could be called back at some point during it if Aramco deems it necessary. And what market sources have indicated that drilling contractors are considering termination of some of these contracts. Again, these are the ones that are being suspended for an additional year. Other drilling contractors have not received notice of an extension on their suspensions, and they are awaiting confirmation that their rigs will be recalled to work this year. So the first round of suspensions really began in April, so we are at that 12-month mark. So some drilling contractors are preparing for potentially returning to work with Aramco. What we've also seen is Aramco is conducting talks with rig owners for new rig contracts or contract extensions going forward. So these new contracts would help offset the around 9 units that are expected to roll off contract with Aramco in 2025. These are units that are not suspended. These are ones that are just coming to the end of their contract period, and they're now going through discussions about an extended or new contract for that. What we've seen is a few over the past several months. We've seen some short-term extensions as the drilling contractors and Aramco continue discussions between themselves. And market sources have indicated that reductions in day rates are understood to be floated by Aramco in exchange for new firm contracts. So we might see some downward pressure on day rates for new contracts signed, or for rigs that are going to be returning to work. But what we have seen earlier this month is first unit getting a new long-term contract with Aramco recently. Artist Jackup Admarine 262 has secured a 10-year contract with Aramco. Now, that rig's previous contract was suspended in April 2024, and since then, that unit has been working in Egypt. So this marks the first rig contract fixed by Aramco in 2025 to date, and day rates for this rig are understood to be in the high 70,000s, which is comparable to its previous day rate with Aramco prior to the suspension. The 10-year contract for a Jackup is a positive sign for the market, although the start date of this activity is still uncertain at this time. And as I've mentioned earlier, not all of the jackups suspended over 2024 are expected to return to work with Aramco. We've seen multiple rig contracts already been terminated, and as I mentioned, more terminations are expected as the suspensions are extended. And this will likely lead to more jackup relocations before the end of 2025. So in these cases, we've seen rigs basically marketed for work in other regions, particularly West Africa and Southeast Asia. So we've seen rigs relocate to there. We've seen rigs relocate also to the Americas, and the Far East as well. So we could see potentially more of those relocations as the suspensions are extended through the year. Now, so far this year, we've seen Aramco has not suspended any new jackups. However, this could change in response to project or budgetary needs over 2025. So as I mentioned earlier, the situation is still fluid for the jackup market there. It's not clear when some units will return back to work with Aramco, or will indeed get notice of further suspensions. And during the year, we will, as I mentioned earlier, we did see a lot of different rounds of suspensions, 3 rounds of suspensions. So we'll be reaching that 12-month mark for other rigs at different points during the coming year. Something else to also mention is this year, the Aramco Valaris joint venture Arrow Drilling has reaffirmed its commitment to a 20-unit new build program that had previously began. We've seen the first 2 jackups of that program delivered and under long-term contracts to Aramco, and a third unit has now been ordered. So this is a joint venture, as I mentioned, between Aramco and Valaris. They do intend to build the full 20 of the planned jackups, and so what we may see in the future as these rigs are ordered and delivered is some of those new builds replacing current rigs in the market going forward. Moving on now to our Middle East jackup forecast. We see some weakening in the near term and a small uptick in demand in 2026. Now, a combination of those extended suspensions, jackups rolling off contract, and the slow pace of contracting that we've seen for rigs in 2025 are forecast to bring jackup demands and utilization in the Middle East down in the coming months. So we see regional jackup demand forecast to dip to around 123 units in September this year, with competitive utilization falling from around 80% down to around 73%, again as rigs remain suspended or other ones roll off contract going forward. And after this, we see some jackups returning to work, and that'll be a combination of the units that are suspended resuming contracts and others securing contract extensions. That's expected to bring regional demand back up to around 135 units by late 2026, with utilization returning to around 80%. But what we're not expecting over the next 2 years is demand returning to the above 150 units that we saw in late 2023, early 2024. Now, this is for Middle East as a whole, and while Aramco is, of course, the major operator in the region, there are also major drilling contractors across the Middle East, and we are expecting other contracts to be fixed in 25 to 2026 that'll be contributing to that uptick in demand over the next year or so. Right now we have Qatar Energy, Bunduk, and KJO all have open requirements at this time. So we do expect to see some of that activity contributing to the forecast demand as we go forward. Moving on to the next slide now. This next slide actually kind of is about something that's not confined to the Middle East, and that's recent economic uncertainty that could affect rig demand going forward. And that's not just for jackups in the Middle East, that'll be floating and jackup rigs could be affected globally. We saw the tariffs announced in April have been delayed until June 2025, but that's still having an effect on the global economy, and we could see that affect rig demand going forward. So following this, the Trump administration announced reciprocal tariffs affecting multiple countries on the 2nd of April to be effective on 9th of April 2025. Now, most of these tariffs have been delayed by 90 days, though tariffs on Chinese goods are in effect at 145% at this time. So it's US focused, but it's had global economic impact from the uncertainty caused by these introduced tariffs. And what we've seen is oil prices dip after these announcements. So Brent and WTI crude prices both dropped sharply in early April. They both remain around the mid-60s at this point. At this moment, the US Energy Information Association expects prices for crude oil and other commodities to continue to experience significant volatility as market participants assess the effects of trade policies. And OPEC has cut its oil demand growth forecast for 2025 and 2026, citing higher uncertainty to the short-term global economic growth outlook introduced by the recent trade-related dynamics. And in 2025, we've seen drilling contractors, both floating rig and jackup focused contractors, have already been experiencing increased idle time on their rigs in 2025. Now, that follows a number of things in the market: the jackup suspensions in the Middle East and in Mexico, general capital discipline from operators, and project delays pushing work into 25 and beyond. So we'd already seen basically periods of sort of flat or declining demand in 2025, with the expectation that we would see demand globally for rigs trend upwards in 2026. But with increased economic uncertainty and lower oil prices, that could result in the deferral of rig demand in the near term, as operators wait for clarity before making major decisions on new projects or locking in rigs at current day rates. And if commodity prices remain low, the rig market could see lower demand in 2026 and 2027 than previously anticipated. And again, at this point, the full impact of the tariffs on the global economy and the offshore rig market is still unclear. What we've heard from many operators is that they are essentially taking a wait-and-see approach over the next few months before making decisions on some of their major projects. For the jackup market specifically, generally in the shallow water areas might have lower break-even costs than deep water projects, but those they're still going to be affected by oil price fluctuations in the longer term. Now we're going to take a look at jackup activity in other regions, especially as it relates to the effects that the Aramco suspensions have had on other areas. So looking at suspended rigs in other regions. So prior to 2024, jackup supply in most other regions had tightened significantly as jackups relocated to the Middle East. So 2022 and 2023 particularly, you had a lot of rigs relocate to the Middle East, and many major markets that significantly tightened up those markets and absorbed a lot of the jackup oversupply in those regions. Now, of course, we have an opposite situation where jackups have left Saudi Arabia for new contracts, or to be specifically marketed for work in other areas, or to be warm stacked while they wait to either resume work with Aramco or find work with another operator. So in some cases, these Aramco suspensions have resulted in a wider choice for operators in other parts of the world, with rigs that weren't expected to become available, obviously back on the market sooner than expected. So we've seen 6 jackups go to West Africa, and of those, 5 had already secured work, while 1 unit is expected to secure a new contract by the end of this year. And we've seen 3 suspended jackups owned by COSL return to China, while another unit found work in Southeast Asia. One of the suspended units has terminated its contract, is now working on a long-term P&A contract offshore Brazil. And Saipem intend to move a jackup to Mexico, where it will replace a unit that was bareboat chartered and contracted in Mexico. So the Saipem-owned unit will replace that. And we've also seen some minor movements within the Middle East itself. Some suspended jackups have gone to work in Qatar and Egypt, or been stacked in the UAE and Bahrain. So it's resulted in some new locations for suspended rigs as we move forward. Now, taking a look at potential jackup work in other areas. What we've really seen over the past year and going forward is expected is Southeast Asia and West Africa as the key alternate markets for jackups that have become available due to the suspensions in the Middle East. Now, Southeast Asia is one of the larger jackup markets outside the Middle East, and there's potential new work ahead for jackups in Thailand, Malaysia, Indonesia, and other countries. There will be competition from jackups already in the area. We've also seen drilling contractors that are Middle East focused have accepted some day rates on the lower end of the range to secure work in Southeast Asia over the past year, which kind of speaks to the importance of it as securing a toehold in the market, particularly for those companies that were more Middle East focused and suddenly searching for work outside of the region. We've also seen West Africa proven to be an important location for jackups seeking new work. As I mentioned, there's 6 jackups have moved from Saudi Arabia to West Africa already. And we've also seen jackups move from the US Gulf to West Africa over the past year. So we still have operators looking for jackups potentially for work in Nigeria, Angola, Cameroon, and Equatorial Guinea coming forward. As I mentioned, it's also been a location where not necessarily a rig has secured a contract yet, but they might be moved to the area for marketing, as there's obviously several countries in West Africa that could potentially provide work for some of these units. And also, as a location, it's relatively easier to relocate a rig from West Africa to the Mediterranean or Middle East if needed. India and the subcontinent, another potential area. Right now, Indian state oil company ONGC is going through the bidding process for 5 jackups, with fixtures expected before the end of the year. ONGC has already opened commercial bids in its 4 jackup tender, and most of the units in line for this work are already in India, so unlikely to absorb much excess capacity from the Middle East in the near term. Other regions, probably less important to the going forward for that. Jackup activity in the US Gulf is minimal and covered by locally based rigs. There's relatively little jackup demand in South America. We have seen 2 units from the Middle East secure long-term work there recently, but probably not a significant amount of additional units likely to relocate there. The Mexican market is a fairly large jackup market, but it's been undergoing its own issues with suspensions and payment problems by state oil company Pemex. And there's a large number of local jackups in Mexico that are likely to already meet the demand generated there. So unlikely to see much relocation from Middle East to Mexico. North Sea, less important on the for rigs in the Middle East, as most activity there will require harsh environment jackups. And of course, the Chinese market, we have seen Chinese-owned rigs return from Saudi Arabia to China, but it's Chinese market's mainly limited to Chinese-owned rigs, so international companies less likely to push rigs over there. And when looking at where these requirements ahead, these are by start date, not by length, so just by 2025 and 2026 potential start dates. But there's a strong possibility that these requirements could be pushed again from 2025 into 2026, or indeed beyond. It's fairly normal for demand to basically move rightwards on the calendar and move ahead into the future. And indeed, some of these requirements may at some point be deferred or potentially cancelled or retendered for a different time period. Let's go forward. Okay, and going now to our key takeaways for the presentation today. Please note that uncertainty continues for drilling contractors in Saudi Arabia. While a significant number of suspended units have found new work, the global market has not absorbed all of the near-term excess capacity caused by contract suspensions in Saudi Arabia. Talks between Saudi Aramco and drilling contractors are underway, with their potential for extended suspensions, renegotiated day rates, and new contracts for certain rigs. So a real mix of activity going forward. As I mentioned earlier, jackup demand in the Middle East not expected to return to previous levels in the near term. And as we saw, opportunities remain for jackups outside the Middle East. And then going forward, with obviously a developing situation with tariffs and oil prices, we'll have to see the larger effects that will have on the global economy and on rig demand going forward. Thank you very much for joining us for our presentation today. Much appreciated. Again, I'm Matthew Donovan, Head of Rig Market Research with Esgian, and Fernando Ortiz has been our moderator for today. So we're now going to move into the Q&A portion of the presentation. Thank you, Fernando.
Thank you, Matthew, and thank you everyone for attending today's webinar. If you are looking for more granular minute-by-minute insights, we encourage you to contact us to arrange demonstrations to our Rig Analytics platform, a comprehensive and trusted source of market intelligence. Let's now take a few minutes for our Q&A session. So we have the first question, Matthew.
Thank you.
Which jackups are most competitive on the global market?
That's a great question. So, I mean, generally, globally, we've seen a preference in most markets for essentially basically newer and higher spec units. So, looking at these sort of 400, 350 foot, 400 foot plus ones that were delivered within the last decade or so, the sort of higher spec premium jackups have been more in demand. And those are the ones that are really in demand in multiple regions of the world. Some of the lower spec jackups might struggle to find work outside the sort of relatively benign Middle Eastern market. Typically, we've seen some of those maybe also have opportunities in India and other regions, but again, we're seeing more of an operator preference in most regions for newer and higher spec premium jackups going forward.
Thank you, Matthew. We have a second question on the chat. How do we reconcile the data shown in this slide with the one we showed a while ago stating 13 suspend rigs secure new contracts?
I think we said 30, as I said, the 13 new 13 rigs securing, the 13 jackups securing contracts.
Yes.
Maybe you could repeat the question on that.
Yeah, sure. How do we reconcile the data shown in this slide with the one we showed a while ago stating 13 suspend rigs secure new contracts?
Well, I think that's the number we've said in this presentation also, that the 13 suspended jackups had secured contracts. That was the number in the presentation today.
Yeah, that's what we mentioned.
Yeah.
So I hope that's the question. If not, please feel free to send us an email and we will clarify. We are running short on time, but don't worry, any questions we don't get today will be answered privately via email. We have the last one, and I hope we have time to answer. Could you please provide an overview of the scrapping activity that occurred in 24, as well as expectation for scrapping over the next few years? Additionally, do you have any updates regarding new builds activity?
Okay, great question. So yeah, we have seen a number of jackups removed from the fleet. Yeah, basically over the last year. We can reach out and give an exact number, but at least one of the units that was suspended by Aramco was indeed retired from the active drilling fleet. And we've seen some other units that have been retired more because of not necessarily suspended, just in the global market. We've seen some retirements over the past year. And part of that has also been rigs that were a rig that was damaged has been sort of written off, so will not be returning to the fleet. So yeah, we do have the potential. There's probably the potential for some more recycling of rigs of jackups over the next couple of years, especially if with demand reduced from previous expectations. And new build activity, I mean, really, the Middle East is the only place we've seen a new rig order in recent years, which is the latest of the Arrow Drilling. Kingdom 3 has been ordered, and as I mentioned in the presentation, they've kind of reaffirmed their commitment to those 20. So, we'll see additional rigs built in the Middle East as part of that program. But we're really not seeing any new builds ordered in the larger global market. We haven't seen. We've still a number of still quite a few undelivered rigs, really from close to a decade ago now. That were ordered and stranded at Asian shipyards. We've seen a few of those delivered over the last several years, and eventually most of those will kind of join the market at some point. But we're not really at a point globally where we're seeing additional new rig orders outside of the Arrow Drilling orders. I think at this point, there's basically you've got excess capacity in the market. There's limited shipyard capacity. It's very expensive to order a new rig, and when there's still sort of excess capacity globally, that's not really impetus to order new rigs at this time. So we're probably not expecting many additional new builds beyond the Arrow Drilling ones for the jackup market over the next couple of years.
Okay, thank you, Matthew. I guess with this question, we end our session of today. Thanks
you
again, everybody.
And yeah, thank you.
Yep. Thanks and have a wonderful day.
Thank you, sir.